Hey, Rinda Emick here, and I am so excited this morning. I get to interview Spencer Bishop, and as soon as he gets on, we'll get this thing going. Hey, Spencer.
Hello.
Thank you so much for joining me this morning. And we chat a little bit, and I know you've done like this amazing car wash deal and some other really cool real estate investing. And so I would love for you to just kind of give us a little bit of your background and maybe how you got into real estate investing.
Yeah, absolutely. So I'm still pretty fairly new here. I'm not, this real estate investor that's been in the business for 10 plus years or anything like that. This is actually my fifth year. So we started back in early 2018. We got involved with Cody Sperber, the clever investor himself, and was able to kind of join his mentorship to learn how to wholesale real estate and just the basic wholesale, learn how to find a house, how to wholesale it and not use your own cash and have little to no risk in your deals. So we were able to scale that whole operation following his processes to get to our first six figures, our first year wholesaling real estate, which was great. But we didn't know what to do next. We never have ran a business before. This was, my first entrepreneurial journey that I've been, kind of pursuing. So it was like, all right, well, we've had success with this wholesaling and stuff, but like, how do we grow it from six figures to seven figures, and how do we go to the next level? And at that exact time, we were finishing our first year in real estate, and we were on stage at the 2019 Clever Investors Summit in Scottsdale, Arizona, where we were able to meet Pace. And Pace Morby was really pushing out this wave of how creative finance can change your life and how it's like ultimately the biggest tool that everybody should have in their tool belt. So at that point, we really were able to start looking at our wholesale deals a different way with a different lens. And we were able to scale our wholesale operation by taking down certain wholesales that we were able to cherry pick, but also wholesaling creative deals. So then we were able to just do more. And we were able to then take our wholesale operation to multiple six figures and then just keep cherry picking out our best creative deals to build our portfolio. And so I've never used my own cash. I've never used my own credit. I've never qualified for a mortgage. I've never, given my W-2s to a seller or tax returns or anything like that. So that in a nutshell, getting us here today, that is our bread and butter is wholesale. And
Okay.
we're still cherry picking our fix and flips out, the ones that are really ultimately good deals, but we're not fix and flippers. I hate fix and flipping. And I would never recommend anybody to start there because you can find out very quickly it never goes how it's supposed to go. It always costs a lot more money than you think it does, and it takes way more time than you think it does. So, with all of that being said, we were then able to get into other masterminds and learn from all of these really successful entrepreneurs that were doing multiple seven figures and, at the level where we want to achieve. And what we ultimately learned was that, all right, this is all the stuff that we've gone through. This is how we've navigated it. But all right, how do we do it in shorter amount of time, but also learn from their mistakes and kind of navigate and pivot around those issues and have success pretty fairly quickly. Now, we're super ambitious. We have a lot of drive. But the thing is, now we're getting to the point where it's like, what's next? What's the wave? Like, where are we going with this? Like, because we don't want to have a seven figure, fix and flip operation because we're not fix and flippers. We love wholesale, and it's been able to help fund a lot of different things and things that we're trying to do, but ultimately trying to get into the wave of commercial real estate. And that's where all of these big guys and gals play, right? It's more for every step and more for your time and energy invested into a lot of these deals. So this year, our fifth year, we were at the beginning of the year, 2024. Well, let me actually back up a little bit. Last year, I was able to talk with Pace a little bit more, and he kind of challenged me on like, all right, you need to get into commercial real estate, buy your first real estate deal. And that's what led us to the beginning of this year where we were able to buy our first car wash, commercial real estate, but we're actually flipping it. But the benefits of that also is that we were able to raise private money for this deal, which we wouldn't have been able to do that prior. without kind of going through this whole process and learning the ins and outs. So now we're just kind of making a bigger wave to commercial real estate and try to take on more to get to that next level.
I love that. And so speaking of this car wash, because you just had a visit from Pace Morby. So how was
Yes.
that?
Oh, it was awesome. We had a blast. We've been trying to get together for quite a while, and we were talking. We're like, well, he's at the hotel, and his team wanted him to do an interview and things like that, and chat and do some content in the hotel room. And we're like, that's pretty boring.
Yeah.
So he was like, well, do you have any real estate here locally that we can go to? Because we're going to be around Central Florida and all of our properties are rented out and stuff. I'm like, oh, I mean, we can't get into any of our other stuff. Like, but I do have my car wash that's vacant. So he made the trip over and we were able to shoot some cool content there and really just have some fun with that. But it was a great time.
And that's expected to be a pretty big profit margin, right? Like he did some of that content where he was explaining your numbers and stuff. And so can you break that down? Because that's so interesting. Do you feel like there's significantly more time you invested into getting this car wash deal where it's at versus like, a single family home that you're wholesaling or flipping? Like, what do you feel like you've invested, as far as time goes?
Yeah, I mean, this was a hard deal, not necessarily just to like fix it up a little bit and get it to market. It's more on the aspect of navigating the seller's attorneys and all of the issues getting the deal. I think it was our hardest deal yet. So a quick little backstory on that, where it was supposed to be a cash deal with the wholesaler that we were buying it from. But we were raising private money to get the deal. Well, the seller's attorney would not allow it. And we were like, whoa, well, like this is normal stuff. I mean, we're just doing a private mortgage and all of that. But then they wanted us to extend the deal, release our $20,000 non-refundable escrow deposit to the seller prior to closing, and then place another additional $20,000 in escrow to be able to close in the next few days. So there were some big hurdles there,
Yeah.
right? But it's a risk and also weighing reward there. So that was difficult in itself. But as far as getting it to market and things like that, cleaning it out, it's been vacant for quite some time, was what we're used to. So I actually my partner is in a lot of industrial warehousing, commercial real estate, and he has a lot of equipment and teams and all of that locally here. So I was able to partner with him, and he brought in his crew and cleaned it all up and got the building all, kind of putting lipstick on a pig a little bit and just freshen it up so that we can take it to market. Now, going to acquire the deal, we wanted to make sure that being our first commercial asset that we're buying, we wanted to make sure that the numbers make sense. And I am local to the property. So we have an idea of what's happening in the area, the traffic that's going by, the location, what type of property it is, the uses, and all of these different things that we were able to verify prior to doing the deal and just make sure that it was a good investment no matter what the exit strategy. So I was able to reach out to my local brokers to get their idea of, CMA reports and get some different comps on, what is it valued at currently? And they said it was a great buy and we were basically buying it under value. So there's a lot of different car washes in the area. However, this self-serve car wash is non-operational and it has been abandoned for quite some time. But however, it is the largest self-serve car wash in the entire area. So that was like number one. Like, all right, that's a great thing. So like, but also the value was in the land, right? It's a commercial industrial lot, corner lot with highway road frontage and 1 acre parcel.
Wow.
So it was bigger than a lot of the other car washes as the structure and the land itself. A lot of these self-serve car washes are struggling. They're not, huge in cash flow. You have to really upgrade them to, digital and things like that to try to maximize the profit potential. But the key thing there was a lot of these new commercial car washes that were being developed is all the new tunnel car washes that you see everywhere. The full automatic drive-through that has the tons of different vacuums and things like that. But they're actually developed on a smaller parcel. So when we looked at those other ones that were going in and being developed, they were actually buying the land for more than what we were buying our property for.
Oh,
So the
wow.
land was on average was going for about 650,000 for these other tunnel car washes that were being developed, and then they were reselling after they were developed for around $2 to $3 million. So knowing that we have a parcel that is already have a structure on it, you're going to save on impact fees, the utilities are in place. It's the right characteristics for the right land, for in the buyer's eyes to be able to be a good investment, right? So we kind of just checked all the boxes, making sure that, all right, we feel good at this price. We're buying it below market. The comparable sales are good. They're there. And we were just be able, wanting to like, all right, let's go for it because we're already getting it at a discount. Now we can put lipstick on the pig and then resell it still at a discount, but make some room for profit. So
That's
that's kind of
awesome.
where we were at.
Yeah, that's so interesting. And you said that you found that from another wholesaler, right? Not your team.
Yes. Yep.
Okay.
Out of the free Pace Morby Facebook group, there's like 40,000 members in that group. And we're super active. We understand what social does and what the SEO does for these different groups. If you're very active, it's going to build the algorithm to feed you what you're ultimately looking for. So, I was just doing my daily routine. I was just looking in the group and boom, it popped up. I was like the first or second comment on it. And I was like, oh, I actually know that property very well.
Wow.
Let me call the wholesaler and get on this as soon as possible. And that is the number one key that I've had success to is how quick I am,
Yeah.
how I attack deals. A lot of people lose deals by just procrastinating or overthinking a lot of their analysis. We're able to underwrite very quickly and get in front of the wholesalers and sellers very quickly to snatch the deal as quick as possible.
I love that. That is such a good tip because I do feel like you're so active in many ways. And then also having a wholesale operation, like I could see how you could be very fast at underwriting and understanding the deals at higher levels. And it's just about putting in the time, right? Like you've put in time to understand these things. And so that is such a great tip. I sit here and I'm like, looking through deals and I'm like, oh, I don't know. I have to. So it's for me, that was a super helpful tip.
Yeah,
So
and
you,
we're still
go ahead.
learning too. We're still learning too. Like we were able to underwrite single family very quickly. Like that's our, what we built everything on. So we've gotten just in such a good groove where we can do single family. But I guess what helped us out on this one was the location, right? Being local, knowing the
Yeah.
property, being able to navigate that with already having our power team in place, our commercial brokers, our tradesmen that can do the work, being at having contacts with the county. So we're able to verify stuff very quickly. But now this is our first commercial asset too. It's still new to us. It's still new. So we are taking, very cautious action. However, when you're buying undervalued, there's a lot of opportunity no matter way. You have a lot more exits,
Hmm.
right?
Yeah.
So when we were able to chat with our brokers, they were basically stating that, it's kind of worth around 750 as is, especially if land is going for, comparable sales around 650,000. So we were able to purchase the property for 487,000, which we were buying it from a wholesaler that was a $37,000 wholesale fee. So ultimately the sales price was 450 with a wholesale fee. So we were all in at 500,000. We were able to raise the private money at 10% interest only for that. So we
Nice.
do have debt, and then hopefully it sells quickly at the 750, and that's what we're shooting for, so we can have a very good return. But
And
we'll see.
you just got this on the market, right? So it is actually on the market at this point.
Yep, it is on the market right now. We were able to just blast it out there and get some professional photos so that it's really appealing to other buyers, things like that. We even had a couple buyers fly in from Georgia to take a look at it.
Nice.
But we don't have a solid offer yet. But commercial properties do take longer. There's more analysis with it as far as buyer standpoint. So we will see.
Yeah, that's so awesome. So this is pivoting you more into the commercial space. What does this next step look like for you? Are you going to focus more on commercial, like car washes, laundromat, like stuff like that? Or are you going down the path of like larger multifamily stuff? What does this look like for you now?
Yeah, that's kind of where we're going, is to the commercial, because there's really good deals right now. Actually, like a lot of like industrial buildings, things like that, retail space. There's good entry right now. There's room. A lot of debt is coming due for these
Yeah.
old time owners that have owned these properties for the last 15, 20 years, where they're having these, you know, these loans that are going to mature and things like that. So there's a lot of people in situations and good opportunity right now. So I do think there's a good push for that. And single family is just really saturated. Everybody wants a single family home. Everybody's looking for a good deal. So it's a lot harder, unless you're being direct to seller like we are, to get a significant discount on a single family asset
Hmm.
versus going commercial. So we are still doing single family stuff, and that kind of keeps the wheels going.
Sure.
But we're making this push towards commercial assets where we're going to get to the multifamily stuff, whether, we're doing a lot of small stuff to kind of get our feet wet and figure out what we do like, what we don't like. And we don't also want to get stuck in one big asset, buying a 200 unit apartment building where, if something goes wrong, we get burnt on our first big deal. So we're kind of taking it slow and gradually going up. And that's ultimately what we did with single family too. We wholesaled hundreds of houses before we even fix and flipped our first house.
Wow.
So I think that that's what we're going to do with commercial, and kind of start ramping things up here in 2024 for smaller residential multifamily, but also getting into the commercial stuff between 5 and 40 units, 5 and 50 units, and then eventually go to the big stuff where we have a very good grasp on what's going on in the markets, and building our track record in the commercial space.
Right. Yeah, I love that. And also, as you start to work through those steps, the team you're going to develop, right? Like, I think that that's so helpful. I'm also in the same space. I'm looking for like the 5 to 20 kind of, smaller mom and pop type stuff right now, as a way to really learn through my processes. And then bringing in like, who are the partners? Like, who can I now go to 50 to 100 units with? And just learning as I go. So I love that. What markets are you focused on?
Yeah, right now we're in the Central Florida markets, all Central Florida counties. It's just such a good area for, appreciation, and the demand. The demand is insane. I mean, people are moving here by the truckloads. So we're kind of just getting ahead of that. There's just not enough housing. There's stuff being developed. There's probably just, probably 10 new big apartment complexes going up in my area. They're going up everywhere. So it's like kind of getting ahead of the wave, right? It's like we already know that the demand is there, but how do we get into the right asset class so that in the next 5 to 10 years, if we get in this year in 2024, the next 5 to 10 years are going to be very profitable, based off the appreciation rates and things like that that's going on in the area. So Central Florida, but we're not keen on just that. I grew up in Grand Rapids, Michigan area, so we love West Michigan, which is a similar type of area where the demand is high. It's an appreciation market. But I'm not opposed to, when we get into the multifamily space, I'm not opposed to the cash flow markets like Indiana, Ohio, um, Kentucky, Tennessee, things like that, where you can get a lot of cheap buildings with really good cash flow.
Mhm.
So we're open to those other markets too in the Midwest.
Awesome. Awesome. So what are your responses when people say stuff like, insurance is so high in Florida, or it's like they're unsure on insurance? I hear that pretty frequently when it comes to these multifamily properties. So what are your thoughts actually being like a local there?
Yeah, I mean, it really depends too on how close you are to the coast. If you're like by the water, you're in flood zones and things like that, you can just already assume that your insurance is going to be double or triple. But the same thing is happening in Texas too with property taxes. It's insurance here, but it's also property taxes in Texas, right? Well, Texas used to be huge, with really good assets to buy, and then they just hiked up all the property taxes. So it kind of levels out. And that's the same thing that's happening here. But if you're inland, it's a little bit lower. However, it really depends on the asset that you're buying. If you have old roofs, if you have outdated mechanicals and plumbing, electrical and stuff like that, you're going to have a higher policy. So if you can come in there with a builder's risk policy, update those things and pass 4-point inspections, you are going to have lower rates. So it just depends on the underwriting the deal correctly. I mean, debt is the biggest piece. So if the debt makes sense, the debt is low, then insurance, you can kind of work in that insurance to make it still cash flow.
Yeah, that's awesome. But yeah, that's something I always hear. But a lot of people do target like the short-term rentals and stuff, near the coast. And so it makes sense. It's not my strategy, short-term rentals, but I know
Not
that.
mine either. I'm not in the hotel business, but as long as you can underwrite them, backwards too as an LTR, like if something happens where regulations change or just something happens where we have another COVID situation, right? Where nobody's booking anymore, you can always go back to a long-term rental strategy and still get through that time, and kind of just manage risk until it opens back up.
And you mentioned also industrial. So what would that look like for you? Like what kind of industrial would you be looking at?
Well, so to kind of really keen on that, that's kind of very local to my area because last year in 2023, and I think it was like March 2023, our city and county amended the tax code for industrial and commercial land to incentivize you to go to affordable housing. So what they actually incentivize is if you can find commercial and industrial land, they will waive the entitlement process to change it to affordable housing, which is absolutely huge when you're talking hundreds of thousands of dollars in entitlement fees and just planning to even have no guarantee that you can get the zoning change. So that's why I've kind of keened in on the industrial commercial style, because we're even looking at development, right? Because it's a bigger play. We're looking at how much, because time is everything, right? But I don't want to flip 100 houses to make the same price or the same amount of revenue on one development project where we can put a lot of money in our pocket by going through this type of process. So that's kind of why we're looking at commercial industrial in our area. But needless to say, like a lot of buildings are you can get good debt on buildings right now where you can do triple net leases and things like that. Where if you can get in now with good debt, the next 5 to 10 years with this industrial and commercial land, or even just buildings, is going to skyrocket because it's going to come back again. As you know, history repeats itself with the market. I mean, we're in a little down spell here, but over time, it's really ultimately going up.
Yeah, I love that. And so if somebody is following you on Facebook or any social media, they're going to see a lot of mobile home stuff.
Yep. Yeah, we do a
So
lot of mobile homes too. Yeah, that is another one of our niches here in Central Florida. It's the next affordable housing here, and when the average home price in Tampa or Orlando is above $400,000, where do they look next, right? Especially if you're talking about government loans, FHA loans, and things like that, where people don't have a lot of money to get into an asset. Mobile homes is that next affordable house. So we do flip and wholesale a lot of mobile homes because they're just so common here and the demand is so high. And we with anything that we flip wholesale, we really stick within a certain median price. We're not doing luxury properties. We're not doing anything out of the norm where we're taking huge risk, right? Where our lenders can be at risk or just our deals can be at risk, right? So we're doing, stuff where it's affordable housing, but also like under $350,000 sales prices, so that we are it's what's hot right now. So if you kind of look at like luxury homes, the average days on market is like 60 to 90 days, which is pretty crazy. But if you got millions of dollars in the deal and the market turns, you can get burnt pretty quick. But there's such a demand for affordable housing that I can buy, renovate, and sell my mobile homes in 90 days or less, which is awesome. That's like literally a very quick turnaround on your deals. And we're just sticking right in that point of those government loans so we're kind of like guaranteeing our sale.
that you're going to get a sale. Yeah. Yeah, that's awesome. So when you say mobile homes, are you focused more on like an individual mobile home on a parcel, or are you actually looking at like mobile home parks that you're going in and flipping in, or is this like just a one-off type
Yeah,
of
right
units?
now it's usually just like one mobile home on land or a couple mobile homes on land, not technically zoned mobile home parks.
Mhm.
However, we're getting into that. The thing
Yes,
is, here in Florida, dealing with hurricanes, they wipe out mobile homes.
true.
So I don't want, 60 mobile home unit park and it wipes out 60
The whole
units. You know what I mean? That's
yeah.
that's
Oh gosh.
that's huge, right?
Yeah.
So if we're doing mobile home parks, it's usually we're looking at like Alabama, we're looking a little bit farther up into the states to be able to try to get, either a better deal, but also a little bit lighter on insurance and things like that as far as the
Mhm.
risk goes.
Okay,
So these
so
mobile homes are usually on land.
okay, awesome. And then so with mobile home parks, you are looking for to acquire those. Like I mean, are you looking to keep mobile home parks or would you do some sort of like flip on them?
It really depends. It probably depends more on the debt, if anything. If we can get really good debt, I would definitely look at it as far as if it's how much it's cash flowing and things like that, because all of those factors, take a play here. But um we're investors, so we're doing the value add stuff. I mean, if we can buy a park where there's old units in them, or they're just or undervalued rents, whatever it is, we can go in there and put new units in there, raise the rents, get a higher valuation, get better debt on it, and refi, right? Pull all the money out and then kind of do it again and again and again. But right now I would be more interested, just because of where we're at in our business, is flipping for that quick buck so that we can kind of turn it over and keep churning and burning it. But yes, we are looking at it depending on the debt and depending on the terms of the cash flow and things like that.
Okay, because it's nice that you have the experience too on like looking at a value add mobile home park, for instance. Like you have the experience of already flipping these mobile homes. So it's interesting because so give me an idea of what like how much it takes to put into flip like one mobile home as
Well,
far
it's
as
actually very similar to a single family home. Now,
okay.
what the benefits are is that there's a crawl space. All right. So there's a crawl space, meaning the access to plumbing, the access to electrical, tie down straps, and everything like that is super easy because you can just crawl under the mobile home and you can access it. Right. Versus like a single family home where you have a slab foundation. If there's a plumbing issue below the slab, you got to jackhammer the entire slab and then fix the plumbing issue, fix the leak, which we have done, and then go back. So everything is just super accessible with mobile homes.
Interesting.
Um, not, I mean, it's not cheaper as far as like materials or anything like that, but it's just more desirable for the affordable for the end buyer and having an affordable home. So that's just kind of what we like. They're easier to work on ultimately.
Okay. Which also can relate to like time, right? So then it's a little bit quicker
Absolutely.
process. Yeah. And and typically smaller in size too. I mean,
We do
so
some
that
bigger ones, but we like to stay
yeah.
like we don't do like super small stuff too. Like that's the same for single family. Like we don't do anything under like 900 and some square feet, right? We don't do
Okay.
2 bedroom, one baths. We do at least 3 bedrooms because you're kind of shrinking your buyer pool. Well, there's
Okay.
families, right?
Okay.
Families that need their bedrooms for their kids and they need an extra bathroom. So it's really just maximizing your buyer pool, maximizing amount of people that are actually going to look at those type of assets. So we'll even still do single wides, we'll do double wides, but our average double wide that we're really flipping for mobile homes is usually like a 3 bedroom, 2 bath, 1,200 square feet plus. That's what we're looking at. So
Yeah.
it's just a desirable home, right? It's what everybody's looking for.
Yeah. Yeah. That's awesome. What's the typical like lot size?
It varies, as small as around 6,000 square feet up to, an acre, 2 acres. Like we're working one right now that's on 10 acres. It's 4 mobile homes on 10 acres, which we're going to get basically the property for free because we can chip off one mobile home and a couple acres and then get the rest of it for free. So it really just depends. I mean, around here, a lot of people like land. I mean, this is Polk County where I'm at. So a lot of country land, just people want the space to be able to do whatever they want, no deed restrictions.
Mm-hmm.
So, but we also do them in town. And if they're in town, they're just usually on smaller lots, quarter
Right.
acre, third acre, things like that.
That I mean, that's definitely so much value. I guess the last thing I would, want to just ask you, I know you said we haven't been in this for very long, 5 years, but still 5 years, and you've accomplished a lot in 5 years. And so it is really helpful to help like these newer investors, and even like myself, I'm newer to the investor side of stuff. So more been in like the traditional real estate space for a while. But as far as getting into like multifamily investing, I'm very new in that. So it is nice to kind of hear from someone. You may not feel like you're super, been doing this forever, but you do have 5 years on people. So what would you say is like maybe something that has helped you, or a tip kind of looking back on your journey that has, where would when you started, what's something that you can kind of help other people with? Like if you do this, or one tip that's changed everything kind of for you in the beginning of the journey.
Yeah, I mean, we've kind of gotten to the point here now just by trial and error too. You know what I mean? Going through it. That's how what we've learned, like being in the right price points, being in the right assets. We've learned all that from going through it, of what works and what doesn't. And I see a lot of people just starting out with no money, no experience, and they want to get into fixing flipping. They want to get into these big assets. They want lenders and all this different stuff. And they are ruining their own reputation. They're ruining their lender's reputation, and they're getting everybody involved the wrong ways. So if you want to do that, just start with wholesaling. Start there. Always start with wholesaling. That is the number one thing. I would say wholesale the world. Doesn't matter if it's single family, vacant land, multifamily. Start there just to learn what buyers are wanting and needing. Like, look where the demand is and go through that. And you can go through it with no risk, or little to no risk, little to no money, right? And leverage everybody else. That is the key there. It's absolutely key. And then you're at that point where you've wholesaled, 20, 50, 100 deals. You have the experience that you can actually use your wholesale portfolio to show your new lenders. So now if you're an operator, now you have a track record of saying, hey, listen, now I know how to underwrite deals. This is all the deals that I've done. These are the deals I've done for my buyers. And it's exactly what I did. And you can even come up with like a little portfolio book of showing, this is what I bought. This is what I had it under contract for. This is the amount that I made. This is what my buyer profited, right?
Yeah.
And then you can give that to other people and just document the journey going through that process, because you're going to get people that are interested, that are looking from afar, whether it's social media, whether it's your local, other local and local investor buyers that are working with you. And then you can build your power team through that process. So then at that point, you have all of this knowledge and track record to then start putting the right people in the right seats and really forming the right relationships to do the big stuff. Everybody wants to put the cart before the horse,
Yeah.
and it will ruin you. And it's really sad to see that a lot of people are putting themselves in that situation because they want clout, or they want to be known for being, oh, I did that, or I just bought this asset. Like, there is so many deals going around that are just bad deals, and people are getting themselves into bad deals. And you can avoid a lot of those mistakes by just wholesaling and figuring out what a good deal actually looks like, because there's a lot of crap out there. There really is. And a lot of people get blinded by the shiny object syndrome and what other people are doing. And it takes so much more time than you think it does. And it takes way more money than you think it does. Don't get hung up on one deal and ruin you. And that ultimately ruin, like the fun out of it, right? Because if you get burned on one deal, and I have lenders that have been burnt before too, and it just sucks because it all can be avoided.
Yeah.
So
I
I would
love
say all in, start with wholesaling. Doesn't matter if it's commercial or residential. Wholesale the world.
Yeah, and get in the game, right? You're like, just take the action. Just start getting in and taking action. Yeah, that's so great. Awesome. And what you're so good at also like sharing like stories with social media. I feel like you definitely are putting out content and letting people follow along with the journey and stuff. And so that's really helpful too. I feel like people are getting a good perspective of who you are and what you're doing. And that a lot of people like even myself like get busy and just don't really spend the time doing that. And I feel like you're really great at that. Has that helped you with what you do?
Thank you. Thank you for that. But yes, I mean, it really has. I've gotten a lot of lenders that way, a lot of people that want to invest with me because they've seen me start from wholesaling to fixing and flipping to doing it all and kind of getting around the block and just having conversations because we're all real people here. You know what I mean? It's like a lot of people try to only show the good or only show
Yeah.
the best things that happen. And it's not real. It's not the truth.
Yeah.
So, yes, it has absolutely helped me. It's helped me find buyers. It's helped me find sellers. It's helped me find private money. So even on a small platform where we started out, with a couple hundred followers, it takes way more time to keep growing it and keep growing it, but you have to be consistent. And social media is huge, is absolutely huge to your success. And we still get a lot of deals from it just by talking. Oh, hey, I saw your story. Hey, I actually have a couple deals in that area. Can I
Oh
send them to
yeah.
you?
Yeah.
So it's an abundance mindset kind of thing. And really a lot of people are camera shy and you got to work through that stuff. You just got to do it and don't care what other people think. And what's crazy to me is that, the people that are really closest to you, your friends and stuff that you really think that, if you put something out, you're worried about what they're going to say. Those people aren't even the ones commenting on and liking your stuff. It's the people that you've never met
Yeah.
that are the ones that are so open and willing to talk with you and work with you. So it's social media has really helped me out. And I've come to find out through trial and error, like what it actually can provide. And it's only going up from here. So and it's like, I think 5,000 followers, like on different platforms, is where you can actually be super significant. So just keep posting, keep being super authentic, and then people will actually be drawn to you for who you are, no matter who you are. And just being real. So it has absolutely helped me. And I would recommend anybody starting out, start posting, start just documenting the journey along the way. Because if you do the opposite where you don't document it and then you get to the end, right? And now you're going to have to start from scratch when you could have been doing it at the same time.
Let me ask you, this is kind of more of a tactical thing, but so when you say document through the journey, I tend to take all my photos and my content and just like let it sit there, in my phone. And then I'm like, okay, I'm going to go back and I'm going to start sharing the beginning and now share a little bit of this. Are you actually sharing, going in, like, let's say you're walking a property, like you're not pre-recording that. Like, are you sharing it like live or recording live and then posting it right away type of deal? Or are you kind of like batching and then like going back and creating the story?
Both. Both.
Okay.
The thing is like you kind of get other issues too. Like you get your competition. You're like, oh well, like because a lot of times when you're in certain markets, like you're working against competition too. That's seeing
Yeah.
that, like even offers and things like that. So I actually just take a ton of video and pictures, and a lot of stuff that I post is stuff that's already happened.
Okay.
Like, you know what I mean? So um it's a little bit of both, and it depends on kind of what I'm doing. But if there's something that I really feel that needs to be like, on social and I want people to see, it's going to happen right then and there. But a lot of times it's backlogged from stuff that's already happened, that I've already accomplished. So you don't have any of the other issues with people interfering with your stuff, because that
Okay.
does happen too. Like there is negatives with it, but it's more positive than negative.
Okay. That is such good advice. Okay. Thank you.
Yeah, absolutely. So I mean, it's sometimes hard too, because then, you don't want to let people know all your moves too.
Yeah. Yeah.
You know what I mean? But
Yeah.
being authentic enough to where you can say, all right, this happened at this point, and then you can document like the whole process because it already happened, the beginning to the end. So a lot of times I'll go back and just put a reel together or something along those lines. And then, that's something that happened 3 or 4 months ago.
Okay. Cool. Yeah,
So kind of do both.
yeah, I love that. Thank you. Well, thank you so much, Spencer. This has been great. I really, really appreciate your time. Um, I
Absolutely.
I feel like we can just keep going down the path, and especially me being so interested in multifamily and stuff, I'm like eager to kind of keep watching your journey and how you guys step into that space. But so neat. Thank you so
Yeah,
much for your
yep.
time.
That's where we're going. Multifamily, I think, is the ultimate goal. That's where all the big players play, just because you're getting more for every step that you're doing, because time is the biggest value of asset. And I've always kind of stuck with me too. It's like, I've always heard the like quote, basically single family is like pretty selfish, because if one family moves out, it's just that one family and you don't have any cash flow, right? But if you have 200 units, somebody moves out, you still have cash flow. Like, it's just the benefits are so much greater than dealing with one single family at a time every single time, where you can do more for every step. So multifamily, I think, is a great space to play long term.
Awesome.
And we're finding the right relationships doing it with it too,
That's
along the way. That's absolutely key.
Yeah, that's such a great point. Awesome. Well, thank you for your time, Spencer.
Absolutely. Thank you, Rinda.